Hello and welcome to another episode of Market Watch. My name is Pasudu Pereira. We have seen the listed companies have started to release the interim financials. So in that context, Chevron Lubricants Lanka PLC, a preferred stock amongst our investors, has also released their first quarter financials. So we invited the Chief Executive Officer, Managing Director of Chevron Lubricant Lanka PLC, Mr. Kishore Gomes, to be in our show today. So welcome to the show, Kishore.
Thank you for having me.
If I just move on to the theme, if you look at the industry as a whole, how do you look at the industry? Where does the industry stand right now?
Well, industry per se has not been performing to the expectations of the 13 players who are operating in the market today. The year-on-year growth for the past 15 years has been around 4%, but we've seen in couple of years it's going beyond double digit. But by and large, industry growth is somewhat low. But that's the global scenario as well, not just in Sri Lanka. Across the entire world, we don't see lubricant markets expanding and following the growth trends of other industry. The reason being that there is technology evolution, and as the technology evolves, there is a natural contraction that happens. Meaning, we have brought two applications as far as lubricants is concerned. One is for automobile application. So when the technology is superior, you run more kilometers. So obviously you extend oil drain intervals. So that contracts the market size in absolute value, absolute volume wise. Then the other being the usage in stationary engines like power plants and various other machinery. So in those, like in the automobile sector, the number of hours that you run your engines with gets extended also. So industry growth that I'm talking about is the net growth after that contraction, which is par with what is happening in the developed countries. So we are moving from kind of underdeveloped country towards kind of a well-developed country, at least in terms of a trend. That's the path we're on. So we see that that is reflected in the lubricant industry as well. So going forward, if you ask me as to what the outlook is in terms of industry behavior, I don't personally expect huge growth. But from an investor standpoint, what they need to keep in mind is when the industry was predominantly ours, we had a monopoly market for 4 or 5 years. And then there was the first phase of liberalization and then the second phase of liberalization. So what we've experienced so far is a kind of a volume decline, which is quite natural from a monopoly situation to the competitive situation we are in today. But then when we had no competition, our bottom line was around 700 to 800 million. But today, with low volume, we have moved the bottom line up to 3.5 billion. So market contraction and industry not performing the way it should be performing in terms of volume performance, we're being able to sort of grow our gross margins, thereby deliver impressive net margin. So I expect the same thing to continue, which again is in line with what is happening in other countries. So from that perspective, lubricant industry is unique.
Right. Sure. If you look at the competition, how does it impact to the overall the industry dynamics? And specifically the Chevron.
Yeah, like in any other industry, competition is a challenge. If one says that competition is not a threat, not a challenge, I don't think that person is talking with any sense. So it is a challenge. We see competition hurting us as well in certain areas, but our strategy is very, very clear. We're not chasing market share anymore, but margin share. And when your strategy is that when you have to chase margin share, all what you do is you depend on premium quality and they try to sort of play in the branded market, which is what we've been doing since 2005, which has worked for us beautifully, and that is why you see this steady growth in the bottom line. Competition is at two levels. One is the second tier, lower tier. That's where all the Indian companies, Chinese companies, and Asian companies are playing, including the government Hyrex company coming under Ceylon Petroleum Corporation. So and then of course LAF as well. While they may be having their own positioning in terms of their preferred or desired direction, in terms of market perception, they all play in the lower tier, where the margins are pretty low. You can sell volume, but you cannot make enough margin. If they're happy, that's fine, but for any player, the expectation has to be at the lowest level possible. So then you have the mid tier, and that's where we are pretty strong, and then of course the higher tier as well. So higher tier is purely driven by technology. It's not a brand driven thing. You have the optimum technology. Obviously, as one of the largest multinationals in the world, we keep on evolving our technology. We do heck a lot of R&D, and we keep moving our technology in line with the engine fundamental developments that happen. So we are playing in those two segments where the margins are, and that way we're being able to, despite stiff competition, deliver the expectations all our stakeholders looking for.
Right. If you look at the lubricant, I think industry is a regulated industry. In terms of the regulatory aspect, how do you look at that? Because I have seen the import tariffs and the negative list, right? And some of the other government policies may affect the industry. So how do you look at the industry aspect or the regulatory aspect?
Well, regulation and tax are two different things, but let me talk about the regulation first. Simple answer to that is there is no regulation, because there is no regulatory body. So in the absence of a proper regulatory body, this industry is supposed to be governed by the Petroleum Ministry. And then under the Petroleum Ministry, there is what they call a shadow regulator, and the shadow regulator is PUCSL, Public Utilities Commission. But the Public Utilities Commission has no power, no meat, no strength in order to take on some of these regulatory issues. So in the absence of that, ministry has to obviously use their weight. We have seen some good measures taken by the ministry and the new minister. But in terms of implementation, if you ask me what my level of satisfaction is, I would say no, I'm not happy at all. But directionally, we see the new minister trying to do what it takes in order to better regulate the market, to ensure that the government is able to collect the taxes as per their sort of standards, plus to ensure that the consumers are not misled, and the rights for the license holders are protected. So intentionally it is there, and recently the minister engaged the Department of Police. He got down some senior police officers, and then sought some advice from Attorney General's department in terms under which law these violators can be prosecuted, all of that. So there are things happening, but despite that, today there is a sizable grey market because of lack of implementation of some of the decisions taken by the ministry together with the police department and Attorney General's department and PUCSL. So grey market is quite sizable. There are product adulteration activities that are happening, and the consumers are surely misled in some areas. So as the market leader, whenever we get some market intelligence, we use our own power, all the resources we have, in trying to sort of deal with these issues, and we're spending a lot of money on legal battles and all of that, and legal cost is very high because the legislative environment or framework is not clear enough, and it's not well defined. So therefore, the police department, to be able to take them to task, there has to be some alignment made to the legislative framework. I don't know when that is going to happen, but Attorney General's department says that the given law we have is good enough to be able to tackle these issues. The issue in the lubricant industry, unlike in other industries, is that consumer has no knowledge to be able to distinguish between the right product and adulterated product. Because when you look at with your naked eyes, all you see is oil. And chemistry is not something you can understand by touching oil. It can only be tested in a laboratory, and consumers don't have access to any laboratory, or consumers do not have any interest go through that process. That's not for them. So obviously they look at the brands, they look at the channels that are being operated by oil retailers, and they make their purchases. So number of times they have gone wrong, and as a result the country loses enormous amount of money, because we all know that we are not an engine manufacturing entity, right? Every single engine comes from out, from a simple iron nail to everything else is imported. So when these machines that are here, that are running or being used, get damaged, over a period of time only you will see the negative consequences, then those have to be replaced with imported machinery. So the amount of money country loses is enormous, and we've been highlighting these issues, taking up these issues with the stakeholders, but they all listen to you. They promise you to take action, and action is not taken to meet my expectations or expectations of the 13 players. So it's a huge issue, and apart from that, since some players are using grey routes to bring in their goods to evade taxes, countries losing a lot of money as well. But the fundamental thing is that lubricant being science and chemistry, the government needs to have an independent laboratory in order to check the quality that is coming in. In black and white, we say these are the quality specs each player needs to meet. But you can say it in black and white. But if we do not have a laboratory facility to test it, at least on random basis, to check if the real quality meets what is said on paper, you're not going to implement it in a proper manner. So in the absence of all these things, countries losing money, consumers are misled, and a lot of issues are being created, and people have to pay the price for it. Country has to finally pay the price for it. So sad, and we're expecting a correction.
Right. If I just move on to the revenue side of the company, I saw the revenue has been marginally dropped for the first quarter 2017, or rather flat, I would say. So if you look at the revenue drivers of the company, what are those revenue drivers for Chevron?
It's basically volume and price. Those are the two things. So in terms of volume, from last year to this year, we've seen a volume growth. But from last year to this year, we've seen a huge cost increase, with crude, from $35 level going up to $55. The base oil, the core raw material we use in the manufacturing process, all lubricants, has gone up as well. So that's one. Number two is, of course, the exchange rate. right? And we import most of our raw materials because we are not a petroleum manufacturing country. So therefore, we have to end up, importing all the raw materials. So when exchange rate is a challenge, it hits your P&L. So that's why you see that situation, and it's not something that affects or has affected only Caltex. It affects every single oil player in the market. So in this environment where crude is moving up, the upstream business, which is oil exploration and rest of it can make money, but downstream has to pay more money. Downstream is the market front, right? Has to pay more money to have access to the raw materials. Right. So you see a shift from downstream to upstream. But when crude was going at 35, it was a reverse switch. So that's quite natural, and that's what we're going through. But obviously, some of these cost increases have to be passed on to the consumer, and we've made that decision, in fact, and not only made the decision, we've implemented that decision as well, unfortunately. So with that, we will see a different quarter.
Right. If you look at the the major consumer segments of your lubricant, automotive sector, and again some of the power sector, and again some of the industrial sector.
Right.
What would be the outlook on those sectors?
Power generation sector in the short to medium term will continue to grow, because what we know and experience is that there is a power crisis. The government did not make the right decisions. I'm not saying just this government, successive governments have failed to put the right strategy in place and execute that. So therefore, until some long-term investment is made either in LNG or coal power, because we all know that hydro capacity is limited, and you have to just look up and hope for rain to fall in order to even maintain the hydro capacity we have. So therefore, the multiplying demand, increase in demand has to be met with thermal power in the short term. And then we saw over the past 1 week or 1.5 weeks time, government making certain decisions in order to allow the private parties to make investments. And government also talked about a tender process they intend going through in order to boost up the thermal power capacity. So thermal power, as we all know, consumes oil. So therefore, we will see the segment expanding in the short to medium term. Construction is another big industry that has been growing, at double-digit level. But ever since this government came into power with the halt of so many mega projects, what we initially experienced for the first 1.5 years is a downward trend. But now, of course, government reverting some of the decisions, making investments in certain areas and going ahead with some of the halted projects, we see some consumption happening, but I don't think that we will go back to the levels we experienced under the previous government. So there will be growth, but will not be as high as what it used to be prior to 2 years. So it's challenging. Automotive sector, automobile sector, with the vehicle population will continue to grow, but these are high-tech engines, and quality is premium quality. So as I told you at the beginning, there will be that market contraction. So anything over that will be net. So these are a few factors to confirm or to conclude that industry growth will not be phenomenal, and it will be very moderate. But for us as an export player, we are exporting products to Bangladesh and the Maldives. It has so far been a very, very encouraging story, And in Bangladesh, year-on-year basis, we have grown our volume by over 20%. Maldives, of course, is a very small market with tourism doing not so well. We haven't seen that much of growth, but there is year-on-year growth. But good thing there is that the forex rate, really favors you because you are earning in US dollars. But obviously, against that, we have to pay more money for our raw materials. So even in the export markets, we have that challenge. But there again, we will have to pass on some cost increases to the consumers in order to maintain our gross margins. Other than that, I don't see any other sector emerging or having the ability to go beyond double-digit growth in the short to medium term.
Right. You talked about your export segment. I think that currently contributes nearly 7% to the total revenue. So do you have a rough figure in your head, okay, what the target, the level where you are thinking from the export side?
Over the next 3 to 5 years time, we want to at least take it up to 20-25%. That's the goal we have in mind.
Revenue.
Yes. So we are working towards it. We have plans in place. We're looking at changing our export model as well in order to make that happen. That's what we want to do.
Right. How is the margin compared to the local sales?
Well, it's two different situations in the two different countries. Bangladesh economy, by and large, if you look at the fundamentals, is a weaker economy than Sri Lankan economy. If you look at per capita income, Bangladesh is around less than $2,000, and Sri Lanka, they say, is 4,000, so almost double. So obviously, in a market like that, though the market is very large or larger than Sri Lankan market, in fact, it's about 3 times higher than the Sri Lankan market. You cannot, expect very high margins, and you are exporting into the country also. And when you are an exporter, there are taxes and some of those incremental costs that you have to navigate. So you cannot expect very high margins. But Maldives is a much stronger economy, and there is more margins in the market. So in certain segments out of Maldives, we make more margins. In some segments, it's the same margin. In some other segments, it's a lower margin than what we earn here. So it's a situation like that. On an average, I would say, between Sri Lanka and Maldives, there is hardly any difference. But surely Bangladesh gives you much lower margins.
If I touch on your cost structure, I think the base oil will be the biggest cost element.
Yes.
Right? And you said the crude prices has also been increasing.
Yes.
In that context, what would be the expectation for the base oil prices to increase by roughly?
Base oil prices have already gone up from last year to this year.
Okay.
And expectation is that it will continue to rise until say third quarter this year, right, and then it will get stabilized. So that's the prediction the world has, but these are predictions, and all the predictions the world made previously, have gone for a sec. So we don't know what exactly will happen. But when we plan for things, when we base our decisions, that's the assumption we go by, which is a global assumption, not just for Sri Lanka. So we work with all the suppliers, and based on various factors, we forecast the future raw material prices. So that's what we think will be the case.
Right. Actually, from the capital expenditure point of view, I think you all made around 1.9 billion expenditure on 2-3 years back on your blending plant. Do you have any further capex plans going forward?
No, we will not be needing any capex for expansion.
Right.
If at all, if we have any bottlenecks, if we have to make certain decisions in order to be more efficient in our manufacturing process, we may make few small investments, but surely in the foreseeable future there is no need for us to make a big capital investment.
Okay. If I just summarize the opportunities, business opportunities where you can see going forward from the Chevron lubricants perspective, what kind of opportunities you look at it?
Obviously, even the moderate growth I was talking about in the lubricant industry is an opportunity. And then apart from that, we see from a consumer standpoint, market standpoint, the mid-tier and higher tier market expanding, and the lower tier market shrinking. So that is with all the other developments that happen in the country, the incomes expanding, and consumer profiles changing, people moving away from generic products to brands. There is that shift happening, which is reflected in the lubricant industry. So when the two markets get expanded, since we are a company that depends on premium technology and brands, we see some new opportunities there. And then of course some of the industries the government is talking about, if they become real, then we will have opportunities. Some of these mega projects the government is talking about will give us new opportunities. And then in the export market, we are focusing on some new segments. In Bangladesh, we want to grow our volumes in the thermal power sector. So those are some of those opportunities we are conscious about, and we do have plans in place in order to capitalize on those, and keeping eyes and ears open for any other new opportunity which is in line with our strategy in order to grow our volume and margin.
Right. When it comes to the investors, about the Chevron lubricants, I would say that dividends would be the prime factor they are talking about it, because if you look at the your dividend payout ratio is somewhere around 90%.
Sure.
So how do you think going forward, what kind of a dividend policy that you will maintain?
Yeah, I mean, I told you what we're expecting in terms of future growth. So that's one factor to go by. The other factor I told you is there will not be any big capital investment.
Right.
And in terms of policy, dividend policy, we want to share the maximum benefit with our shareholders then and there. We don't believe in keeping money in our balance sheet and earning a very low return through which killing the value for the shareholders. So you can judge the future by what we've done in the past, and I believe it will be very much similar, if not the same.
It's good news for our investors, I would say. And in conclusion, what kind of a message you can pass to our investors?
Yeah, I mean, we know stock market sometimes becomes a playground, and people speculate, and there are good decisions made, and there are bad decisions made. People go with the trend, vibes, sentiments, all of that. But as investors, you should look at the fundamentals of a business before you make any investment decision. What that business is, what the industry is, how healthy the industry is, how strong the organization is. Look at their past performance. Analyze all the data that you can have access to. And see what kind of returns those companies have given the shareholders in the past, what the policies of the directors may be, all those things that are important when making a decision are the ones investors should be worried about or concerned about, and make an informed and intelligent decision, rather than being driven by the vibes you hear and sentiments and all of that. I don't think in this environment making decisions on that basis will take you far. So yeah, it has to be a well-informed decision using all the power you have as a human being, as an investor. in order to make the best judgment possible to get the best return for your investment.
Very interesting, and thank you very much, Kishu, for being with us today. It was very informative discussion, and I think our investors definitely will benefiting with this thing. Thank you so much.
Thank you for the opportunity.
Thank you very much for viewers at home. See you next time with Market Watch.